What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our CPI live stream. It's CPI Wednesday. Inflation numbers are coming out in under 30 minutes. So 30 minutes, and we're going to get the CPI, core CPI, that is your consumer price index over in the US for the month of December. This is the first report for 2025. First inflation report for 2025, perhaps one of the most important ones because we do have the Federal Reserve meeting in exactly 2 weeks. So on the 29th, in 14 days, we're going to get the Jerome Powell speech. We're also going to learn more about interest rates. And as we are coming down with those rate cut expectations, they've gone from 4 to 2 to now 1. And of course, there's also some expectations that that is going to get eliminated altogether. So today's report, very, very important. Do me a favor, share this live stream with as many people as you possibly can. Literally just blow it up, copy the link, paste it everywhere. Discord, WhatsApp, Telegram, Facebook, doesn't matter. Just invite as many traders, investors as we possibly can so that we can have a very lively and engaged discussion here as soon as those numbers come out. Pre-market right now, we're seeing QQQs up over 40 basis points, with SPY up over 35 basis points, and we've got Tesla here up almost 1%, back up to over $400, and we've got Nvidia up a little bit over 24 basis points as well. So welcome on board, everyone. Thank you so much for joining. Volatility is trading back under 19, down about 43, 44 basis points, with crude oil sitting at just a little bit over $77 per barrel. If you take a look at the monthly chart, in the month of December, crude oil prices were up over 5.4%. So this can certainly cause a little bit of a problem when it comes to energy prices in this report, because remember, every report that we get is for the preceding month. It is a lagging indicator. In other words, we are getting the numbers for the previous month. And so December, we were seeing a 5.4% increase in crude oil. And of course, January has been very strong for crude oil prices, up another 8.4%. So we'll find out about this change in the February report, which will come out for the month of January. So once again, thank you so much for joining. Pre-market, we are somewhat higher. Yesterday, there's been a lot of weakness. Every rally has been getting sold off in this market, as we are down about 4.5%, close to 5-6% from our all-time highs. If you take a look at the NASDAQ right now, currently it is down, I think, over 5% in a pullback at the moment from all-time highs. So we're down just under 6% from all-time highs, still within the context of this downtrend, so lower highs and lower lows. And then, of course, if you come in, take a look at the S&P 500, it is also down, I think, close to 5% from all-time highs. So a little bit over 4.2, just under 5% from all-time highs. At one point, of course, on Monday, we were much lower. So as we discussed on on Monday morning, pretty much talking about a huge gap down, which came in. We were down over 1%. For the NASDAQ, we were down over 1.5%. But then I also mentioned in that video that it's possible that buyers step in. There might be some technical rebound as buyers step in, and of course these gap downs, in most cases, a lot of the buyers hit the bid and the markets rally back up, but then right now we're struggling at that resistance once again. So we're still within the context of this downtrend. So we'll find out exactly what happens in about 27 minutes. As soon as these CPI numbers come out, are they better, worse, what the expectations are going to shift to for interest rates, and that's really what's going to dictate market momentum. And of course, a lot of individual stocks, including our fan favorites, not to mention pretty much the entire market as well. So thank you so much for joining, everyone. Shout out to all of you. Tony, good morning, Caddy. Great dip buying on the SoFi the other day. Yes, so $13.75 was a price that I picked it up. And like I said, I also pinned that comment in that video as well, where SoFi, anything in the low 13s is a buying opportunity. The risk reward is actually a lot better for SoFi in and around these levels. And again, this is the downtrending channel within which it's still trading at. And if it does break out about $14.85, $15, then there is a possibility that it gets up to as much as $15.50. That's going to be more of a near-term target if it breaks out above this resistance, still within the context of this downtrend. As you can see, yesterday we got tagged at $14.87, so we were off by 1 cent on that resistance. And so today we'll see if it actually breaks above this level or not. Pre-market, it's up another 2%, trading back up to $14.84. Another one that I mentioned was, of course, Nvidia. Anything in the low 100s is actually going to be something worth buying, in my opinion. And I've also got puts expiring for Friday. So today's Wednesday. In about a couple days, I've got SOXL and Nvidia puts that are going to be expiring. Nvidia put strike is at around 124. or might be 123. I think it's 124. Or let me just take a quick look. And then SOXL put, I know that it's at 2250. That's the put strike for SOXL. Those are cash secured puts. And then for SoFi, I'm actually planning on selling more calls on the next breakout. So if SoFi gets up to, let's say, 1550, that's the target that I have near term. I will be looking at selling more calls on SoFi, and then we'll might even consider doing some buy rights. In other words, picking up shares here, a couple hundred shares, and then selling calls against those shares around these levels. So my Nvidia put is around 124. So that is the strike, and then of course calls at 140 that are out of the money, back out of the money, expires in September. So I've got a little bit of time there. I'm up 25% on those, and then the Tesla calls at 270, which are deep in the money right now since Tesla's already trading at close to $400. I will be rolling those out as well. If you want to be a part of the entire journey as we are trading options, there is a separate options portfolio that I share with all the members on Patreon. You'll be able to see every single data point, my beta, my volatility, my performance, my trades, my alerts, everything. Link's going to be down below if you want to join and of course be a part of our community. So CPI numbers come out in about 24 minutes, everyone, and we've got a poll going on right now, so make sure that you do participate on that poll as well. There's, expectations, of course, whether the markets are going to be green or red after CPI, and we're trying to get to at least 500 votes by the time the report is released at 8:30 a.m. So make sure that you participate, you vote, and you help other people join our live stream and get them to vote as well, so we can have a pretty good sentiment check on where everybody thinks the market's going to be after the report comes out. Right now, about 2/3 of you, 68%, is expecting for the markets to be higher. In other words, green post-report. Now, going over to some earnings. Earnings were also scheduled to start today, so banking is one of the first sectors to report earnings. JP Morgan with a double beat. It is pushing higher, so is a lot of other banking stocks. If you come take a look at XLF, which is the entire financials ETF, which has a lot of banks in it, it is pre-market pushing up over 87 basis points, close to 1%, not to mention a lot of individual stocks like Goldman Sachs up over 2.3%. We got JP Morgan also pushing higher, up a little bit over 1%. Wells Fargo, despite the missing revenue, beating EPS up over 3.6. If you take a look at Bank of America, which is also, I think, green, up over 1.7%. And SoFi could be one of those reasons why it's also pushing up over 2.2%. And then, of course, PayPal was green yesterday, up over 3.8%. Visa, MasterCard up over 30 basis points and about 10 basis points respectively. So we're seeing a little bit of that momentum for banking. JP Morgan reporting in at $42.7 billion of revenue, with EPS coming in at $4.81, so double beat there. Wells Fargo, like I said, missing revenue expectations, coming in just shy of $20.4 billion, EPS about $1.42, and then BNY Mellon coming in at $4.85 billion revenue, $1.72 in earnings per share. So a double beat for BNY Mellon as well, which I believe should also be pushing higher here, up over 2.7%. And then Citi is also, that's going to be ticker symbol C. It is up over 3.5, $76. I think this is a brand new all-time high for, nope, not at all. It hasn't really recovered since the great financial crisis, but it's a new 52-week high for Citigroup, getting up to over $76. So that's where we are. Banking is getting started. Earnings season is getting started. And one of the things that we've also included in the MoneyVest platform, which I think is very, very cool, is that if you select any stock and you come down to fundamental analysis and then look at the earnings volatility, we have specifically pointed out the earnings volatility. You can go back as many quarters as you want, as far as 20 quarters, which is 5 years, and take a look at the entire company's history of whether it has beaten or missed expectations for revenue and EPS, and then also how the stock price performed after the earnings. So you'll get a very, very good sort of breakdown, both from a table standpoint and also a line chart, giving you insight into the historical earnings, the price movement, the volatility, the beat, expectations, revenue, EPS, consensus versus what the actual numbers were. So that is also available on our platform. Now, coming over to economic calendar, what are the expectations for about 20 minutes or so here? So this is going to be the numbers that are expected to come out. We're talking inflation rate year over year, which is headline CPI, at 2.9. I think 2.9 is the number, or I think 2.8, it might be a little bit over 2.8 to 2.9. That is where the expectations are. And then month over month at 0.3%. And then we're looking at core expected at 3.3%, with core CPI month over month at 0.2% as well. So if you're asking yourself, where are we currently? Well, let me just quickly show you guys that also. So let's just come over to the 20-year CPI. You scroll in, we've been ticking up slowly and steadily. So you can see that we've been going up from 2.4, 2.6 to 2.7. And now the expectations are for 2.8, 2.9. So this has really been accelerating. And if you really consider where we have been, I mean, it is, we've been somewhere between 2.5% and 3.5% for almost 2 years now, almost 2 years. And this is kind of starting to feel a lot like stagflation, because if inflation becomes very reluctant to come down, and something that we did discuss, it's really the last mile. It is really the last percentage that is very, very difficult to accomplish, right? And something that I gave you a good analogy. If you guys remember from last year, what was the analogy that I gave you guys? What was the analogy that we talked about, that it is very difficult? The last few bit is the most difficult part. If anybody remembers what that analogy was, let me know, because it was a very, very unique analogy that I gave you about what that inflation battle is going to look like, especially towards the very end, especially towards the last few percentage points drop that we need to see. Because look, we were at 9% back in June of 22. So if you consider June 22 9% and June 2023 3%, that's a huge reduction in the rate of increase, right? That's a lot of disinflation, right? Yes, Kevin says weight loss. Yeah, yes, that's the analogy that we talked about, right? It's a lot easier in terms of body fat percentage. If you're trying to reduce your body fat percentage, it's really easy to go from like 20 down to 10%. And then the last few percentage points, if you want to go from like 10 to 8 or 7, the last few percentage points that you really want to shred is the most difficult part. It's the most difficult part. And I was actually reading about this, on my health app earlier. There's also a metric called VO2 max that a lot of athletes track. It is really just how much oxygen your heart can I think pump, or how much blood your heart can pump, and how much oxygen you can actually inhale at a given point. And the VO2 max is a lot easier to increase initially if you haven't tracked it, but then going to really, really high levels of VO2 max requires more intense training, more hit workouts, and really just kind of maxing out. You need to be like at 95 to 100% of your heart rate when you're working out in order to really increase your VO2 max. And that's how it works with most mathematical numbers. And same thing happened with inflation. If you really think about it, from June 22 to where we are in June 2023, that's a 6 percentage point decrease, right, in overall inflation. So that is, again, not a decrease in prices, but inflation going up at a lower rate. So that is disinflation, not deflation, not reduction in prices, but the correct term is disinflation, meaning that prices are still going up, but at a slower rate. So in 1 year, we go from 9% down to 3. But then look what happened since June 23 to now, let's say June 25. 2 years, we've been flat. We've been pretty much sideways. And this is really what the market is concerned about, is, if inflation continues to be above the Fed's target at 2.5%, 3%, if energy prices are starting to move back up, then of course this number could accelerate back up. And then, now next thing you know, the interest rate expectations for rate cuts is now going to get eliminated altogether, which is going to lead to a huge repricing for the market. Because originally, if you consider December 18th, and, to be honest, December 18th really should not have been such a wild move in the market, because, we already knew like what the expectations were going to be. We literally, like, if you go back and watch my video from December 17th, I talked about how the Federal Reserve is, where the expectations were and what the Federal Reserve is going to put down for their interest rate projections moving forward. And once we got those numbers, there was no surprise, especially not on this community. Like in our MoneyVest community, we already knew what the Federal Reserve was going to put down. They were certainly going to come down from 4 rate cuts. The question was how much? And they matched the market. They came down to 2 rate cuts. I think that's really what they have in their SEP even right now. But yes, somehow the market's freaked out. The market's freaked out significantly, probably because of their expectations of inflation going up or accelerating back up. And that's why this is a very, very important report going into the next like 15, 20 minutes, because this is really what's going to dictate what the Federal Reserve does next, in their January 29th meeting, so in about 2 weeks. And really, inflation's been moving sideways, which obviously is not the best news. And if you take out food and energy, it is obviously a little bit more elevated at 3.3%, 3.2%. It's been pretty much in and around these levels since September. So if we get another 3.3%, we're pretty much sideways for 4 months in a row: September, October, November, and now December. And so that is not doing any good to overall Federal Reserve's objective of bringing inflation down. So that's what we have, and this is really what's going to be the second equation after we get the inflation numbers. What is the market's expectations? And right now you'll notice markets are only pricing in for one rate cut only, because right now we're sitting at 4.25 and 4.5%. And if I show you what the Federal Reserve is putting down in their expectations for 2025, there were two rate cuts expected. 2024, we come down to the last meeting, projection materials on December 18th. And so you'll notice that 2025, they were expecting it down to 3.9. So 3.9 obviously is a 50 basis point rate cut. That's, Federal Reserve expected we're going to be here versus markets expectations are over here. So the good thing is that markets in the past have been more optimistic about rate cuts than the Federal Reserve. And so that was actually a bad thing. The good news this time around is the markets are pricing in for one. The Federal Reserve told us two. And so that was kind of weird on December 18, that even though the markets were already front running the Fed in terms of those rate cuts, that, okay, we're not getting 4, we're probably only getting 2 next year. And the Federal Reserve actually delivered on that. They got cut down from 4 to 2. That was still a catalyst, somehow shocking to the market. And then, of course, we saw this huge sell-off with volatility spiking, significantly up to 27.30. This time also, it's the same thing. I mean, we're pricing in for 1 now, and we'll find out in 2 weeks what Jerome Powell has in store for us in terms of interest rates. But I won't be surprised if market, again, gives us a bit of an overreaction to what the interest rate expectations ends up being, even though market's already optimistic that, okay, we're not getting 2, we're only getting 1 in 2025. So that's the entire update so far. Coming over to pre-market right now, QQQs are just over 34 basis points higher. We're at 367 votes, everyone. So make sure that you do participate in the poll. Let us know what you're expecting from the market after the CPI numbers come out. Green or red, 2/3 of you, 66% of you guys right now are expecting for markets to push higher after CPI. Let me just go ahead and read some comments here. So Miker Diver, so hit the like, everyone. Yes, so thank you so much for reminding everybody. Make sure that you drop a like so we can have this stream push out to more and more people. More people can join us. More the merrier. So Srinivas, hi Caddy, how are you doing? After a very long time, you're doing a live. Yes. It's great. It's awesome to be live again. Usually, doing live streams obviously takes away time from trading. And I really want to be focusing on the community like Discord and trading. That's really where I want to give most of my time. But then, of course, for important days, I'm more than happy to do these live streams. In the past, I've had these problems where I'm live streaming and I'm not able to place any trades or send out any updates in the Discord. And so now I'm either doing them pre-market and then getting ready for market open, or I'm doing them after the market's already opened, like a few hours after the market's opened, and then of course during very, very important days such as today. Umesh says, I'm feeling bullish today. I'm crossing my fingers, inflation stuff and things. I'd love to see you do a collab with Amit. Vault, Karthik, do you currently feel that these pre-market moves are technical rebounds? If CPI is good, do you think the markets will rebound from where we are and charge higher, and this will not be a dead cat bounce? Well, I think we're still in the context of a downtrend, so I think that's when we can say with some certainty that we are finally starting to break to the upside. And that's one of the things about understanding trends, is that you have to wait for confirmation. So the price that you pay for waiting for the confirmation is the lost gains. So in other words, if NASDAQ, for example, pushes up another 4.4%, it would still be within the context of a downtrend. It would still be in a lower high and lower low pattern. It's not until after it breaks out above 20,200 where it's actually starting to break from this downtrending channel, and we're back into a higher high and higher low pattern. That is showing strength, and you always want to be trading into the strength, right? You never want to be trading into weakness, because weakness can really result in some dangerous positions. And, while you might have a very good risk reward ratio, so there's always a trade-off between a good risk reward ratio and a good success rate. So while you might have the best risk reward ratio here, because the upside is, let's say, 4%, and you've got a downside of less than 2%, so the risk reward is much better, the probability of success is also lower. Why? Because there is no clear change in direction. There's no clear confirmation yet that we're going to see any type of momentum back up. There is still a downtrending channel of lower highs and lower lows. But then while you wait for that confirmation, the risk reward, a lot of that risk reward is already gone, but then the success rate is much higher. That's why, we talk about buying the dip. A dip is always within the context of an uptrend. So if you take a look at this uptrend for the NASDAQ over here, boom, 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 it was pushing higher, higher. This was the uptrend. This is a dip, right? This is a dip. This right here was not a dip. This was kind of like the beginning of this overall pattern, but this was a couple dips right here where you're buying and of course trading into the strength here as we are in this long-term sort of higher highs and higher lows, a little bit of a uptrend there. So no, it's kind of hard to really predict whether we are going to break out of this channel. But the most important resistance right now for the NASDAQ is going to be right there where we got rejected yesterday at 19,350. And then if you come take a look at S&P 500, we're around 5,900 for the S&P 500. So burpees are great for VO2 max. A cool analogy. Yes, burpees are definitely challenging for sure. This weight loss talks remind me I got a box of Cheez-Its and I need to finish them. I lost 25 kgs in 1 year, then gained 5 kgs the next year. But that's still net positive, net 20 kilos that you lost. That's incredible, man. Congratulations. Okay, we need to move aside from all this weight loss conversation. Lost 60 pounds in 2 months by intermittent fasting. Yes, intermittent fasting is great, Tony. Been doing it for over 2 years. Intermittent fasting with keto just can do wonders. But of course, you have to kind of ease into it. You can't just do it all of a sudden. But I've been doing 20-hour fasts like last week or so because I gained a lot of weight during the holidays. You can't tell by the camera and the good looks, but I am pretty heavy right now. I'm trying to lose all that weight from the holidays, like Thanksgiving and Christmas and New Year's really got to me, especially in the U.S. when you have like everything's like super big. You have this apple pie which is like this big. And it was so for me, for like pecan pie was the favorite one. Pecan pie, it's just really, really difficult to keep my hands off of pecan pie. So, but anyway, so we're all in on Tesla, hoping for a run to the moon. Let's see, will it be up or down? Voice keeps breaking up, Marvin. So you may want to refresh. Hopefully it fixes that issue for you. Let's see. Zuckerberg, Musk, and Bezos will be present at Trump's inauguration. This will be a really oligarch party. Yes, that would be quite the sight to see. There's also the Jimmy Carter funeral. There were the first time I think the 5 living presidents were in the same screen or same frame, I think since 1966. I think the first time since 1966. I could be wrong on that date, but I saw a video where the 5 living presidents were all in one frame during the Jimmy Carter's funeral, which was also pretty crazy to see. So it's kind of nice that we're seeing a lot of collaboration between some of the more bigger celebrities and business people and entrepreneurs. I mean, of course, Elon Musk and Mark Zuckerberg are always going at each other. And then Mark Zuckerberg was actually pretty vocal during the podcast that he did about Joe Rogan, talking about Apple's innovation. I'm actually going to be doing a clip on that as well, which was very interesting. He pretty much took shots at Apple, talking about their innovations pretty much dead after Steve Jobs. And they're really just trying to milk as much as they can with the existing iPhones, but their sales are declining and the 30% developer tax is just too crazy. And it was just a very, very interesting take that Zuckerberg was very vocal about Apple and their vision moving forward. So, but anyway, that's for later. 6 more minutes to go, everyone. So we've got inflation numbers coming out, CPI in 6 minutes. Do me a favor, share this with other friends, families, traders, investors, so we can have more people join us. And pre-market, we are slightly up. And the first thing we're going to do is we are going to reload this page right away to take a look at those CPI numbers as soon as they come out. In fact, you know what? I'm going to open this up in incognito because of some cache issues that I've faced before. And so as soon as 8:30 a.m. hits, I'm going to reload this page and we're going to take a look at exactly what those numbers are. Remember, core CPI expected to be at 3.3 with a month-over-month change of around 0.2%, I think is the number, 0.2% estimated. And then headline inflation expected to be somewhere around 2.8, 2.9% on a year-over-year basis, and then month-over-month at 0.3%. So headline 2.8 to 2.9, that's the year-over-year number expected, and core at 3.3. And we're ready in 5 minutes. We're going to get those numbers. Who is excited? Who is nervous? Let me know in the chat. And we've got over 525 votes now, so we're going to end the poll here shortly. Still two-thirds, 66% of you guys are expecting the markets to pop after the inflation numbers come out. So we got QQQs over here, we got SPY over here, we've got NVIDIA, and we've got Tesla over here. So we got Tesla, NVIDIA, QQQs, SPY. Volatility, of course, is going to be over here. Let me just pull up the 10-year treasuries on one chart. So 10-year treasuries back down to 4.76. And then we'll take a look at the dollar index maybe on this main chart, because the dollar index, crude oil, treasuries, gold prices, Bitcoin, individual stocks, and of course the broader markets, everything is going to be moving on this CPI print in about 4 minutes. So Kevin says, I'm scared. No, you're not. No, you're not. If anything, you're more than prepared. More prepared than any one of us here. So, okay. Let's do this. Let's do this. Could this be a sell the news type event? Well, it could be. And, I was talking to one of our members the other day, and we were talking about how the markets can do weird things all the time. They do weird things all the times, and the markets can overreact. So much so that you could actually know. I've said this before in previous live streams as well. The markets is so crazy that you could actually know exactly what the numbers are going to be and still not figure out which way the markets are going to go. Like, that's how crazy the markets are sometimes. You could actually know the inflation numbers beforehand and still not trade well because you would have no idea, is this going to be, is the markets going to take this as a positive or a negative catalyst? So, that's how crazy the markets is. Even if you still don't know, right? That's what makes the market so beautiful in terms of just this massive mechanism that it is. It's like hundreds and millions of people of brains kind of like coming together, and everyone can dissect the same information very differently. Everyone can analyze the same information very differently. And so everyone makes different decisions. And so the market can move very differently to what you think. Okay, let's do this. Milan, he doesn't like the blue badge people. By the way, we added a new badge feature function into our Discord, which I think is pretty cool. If you've been a part of our MoneyVest community for many years, you get upgraded every single year with a new badge, which I think is pretty cool. And the crowned badge is the black badge, which is the actual logo, which is what you see in our channel. That's for 10 plus years. And then the next best is going to be the black, white on black. That is for over 7 plus years. Even we've not been around for 7 years, but nonetheless, we're going to get there. Even I'm going to get there eventually. So anyway, here we go. Over 1,000 people watching. Make sure that you drop a like, subscribe. We got the inflation numbers coming out in 90 seconds. 90 seconds. About 90 seconds, we got the numbers coming out. Milan, if you've been around over 3 years, man, just send me the details and I'll upgrade your badge. It's not that difficult. Just time has to pass by. Patience is the name of the game here. You have to be patient. I'm patient. I'm patient for my 7-year badge. I haven't even hit 7 years, so we're waiting. Anyway, so a minute left, 60 seconds. Everyone, make sure you drop a like, subscribe to the channel, and we're ready to go. We're watching everything across the board, all asset classes. We're watching the 10-year treasuries, the dollar index, gold prices, oil, volatility, Bitcoin, S&P 500, QQQs. So pretty much all coverage, and we're going to be reloading this as soon as 8:30 a.m. hits. I'm going to open the PDF, and we'll take a look at what those numbers are. 3.3% is expected core, and headlines expected at 2.8 to as much as 2.9%. Month over month, 0.3 and 0.2% respectively. So we'll see whether we beat or miss expectations and how the markets respond to these numbers in about 30 seconds. Let's do it. Let's do it. 1,100 people watching, everyone. Make sure that you drop a like and subscribe. Don't forget to subscribe. It really helps the channel out. We're trying to get to 100,000 by the end of this year. Hopefully way before that, so we can have a bigger party, 100,000 subscriber live stream party. All right, so 10 more seconds to go. Let's do this. And in 5, 4, 3, it's like the New Year's, 1, and let's reload this page. And let's see if we have those numbers for us. Okay, December, we increased by 0.4%, and looks like core decreased down to 3.3 as expected, but headline is now up to 2.9%. The markets are pushing up 1.2% increase on the QQQs. So very quickly, we are seeing a 3.3% print on core. That was as expected. And the headline looks like it got up to as much as 2.9%. So let me just pull up the charts very quickly. I'm going to go up to the 20-year time frame, hit go, and boom, there is a significant increase, 2.9% for headline, and core coming in at 3.2%. Okay, so slight decrease. It's kind of hard to see in this PDF down here. 3.2, better than expectations versus 3.3. So core coming in slightly better than what the expectations were, from 3.3 down to 3.2%, and then headline increasing to 2.9%. Let's take a look at some items here. So energy, as expected, increasing month over month. We've got 4.4% increase on gasoline, energy commodities up 4.3%. Energy as a whole was up 2.6%. All items up 0.4%, so a little bit higher than what the expectations were. However, core, I think, is what the markets are really excited about, 0.1% only. So core CPI is only up 0.1% month over month, and year over year, it's now sitting at 3.2%. So those are the two main numbers, which I think the markets are super excited about. Look at these green candles. S&P and QQQs both up over 1%. Tesla back up to 410, 3.4%. Nvidia's up 1.7%. Crude oil prices are basically flat, and volatility is down over 1.7. Bitcoin also up over 1.5%. Back up to almost $98,000. And we got the 10-year treasuries with a nice little drop, 1.5% lower, down to 4.7%. So energy with an increase, but that is not accounted for in core CPI, which is one of the reasons why core CPI is coming in much stronger. However, new vehicle prices, 0.5%, used car prices, 1.2%, and shelter, 0.3%. Transportation services, 0.5%, medical care services, 0.2%, and let's see, basically apparel was 0.1%, medical care commodities was basically flat. So core CPI, I think that's one of the silver linings here in this report, which is why the markets are just going absolutely crazy right now. SoFi is ripping. Also, the dollar index dropping off about 1.5%, so back down to under 109, and SoFi is now up over 5% right now. So absolutely incredible momentum coming in for SoFi. So that's very, very good to see. And we're coming up to this resistance at 1530, 1545. So look at that pop. QQQ is unstoppable right now on the 5-minute chart. Those green candles are pretty strong. And you guys, 69% of you guys were expecting a green post-CPI green expectations here. And boom, right on the money. You guys, 69% of you guys, right on the money. 750 votes. So 69% of that is a lot of people. We're talking over 500 people on the money, putting it on the green after the inflation report, and boom, just an incredible number. However, I'm still a little bit concerned about headline. Reason being is because headline is really creeping up. As you can see, if you come over to all items, we've been going up since 2.4. We're pretty much back up to 3%, guys. I don't know how the market is not, well, it's really focused on the core side of things, not so much on the headline maybe, because core is really what the Fed focuses on, the Fed's preferred measure of inflation. And so, 2.9% getting back up from 2.4 is still, in my opinion, a little bit more problematic. I think people are really excited about the core number, which is coming down to 3.2. From about July, August, we were around 3.2. July and August, 3.2, and then we're back down to 3.2. So we'll see. I mean, how this rally kind of trades rest of the day, if there is any momentum for this. But let's just quickly break down the report a little bit further. Let's just go into the details here, because energy prices, November to December, 2.6, 4.3, 4.4. So again, energy across the board was green because we had a December month, which was very strong. And not to mention January, we were up over 8.4% for crude oil. And then if you take a look at food, 0.3%, food at home, 0.3%. I want to take a look at where the actual declines were on a core basis. So all items list food and energy over here, only a 0.2%. Yeah, that is going to be a 0.2% month over month. Let me see if Econ has their numbers yet. Because core CPI month over month, is it 0.1 or 0.2? That's what I'm really curious about right now. Okay, 0.2%. Consensus was 0.3. Okay, so 0.2%, slightly better than what the expectations were there also. But shelter was up 0.3, and then alcoholic beverages were down about 0.3%. Let's see, 3.9 for airline fares, not helping there at all. Transportation services were up 0.5%, obviously, because oil prices were up. The declines, I'm looking at the declines. What actually did decline on a month-over-month basis? We got pork chops, we got other pork, including roast steak, ribs. We got fish and seafood. We got fresh whole chicken selling off. We got uncooked ground beef down 0.3%. Some of the big changes here, oranges. Oh, come on. Really? 3.4% decline month over month? Kevin, what's going on here? 1.1% decline in fresh fruits. Then we had 1.5. I think food was like one of the reasons why. I think we may have seen a reasonable decline there for core CP, for headline CPI. But then let's take a look at electricity. We are down at 2.8 on a year-over-year basis. Oversupply of oranges. Energy is coming back up to somewhat being in inflation here. It was in deflation for a very long time. And food at home also slightly increasing 1.8%. Shelter continues its disinflationary process. It's down from 8.2 down to like 4.6% now, but still pretty elevated, I would say. And the new vehicles starting to roll right back up, 0.4%. Still negative though, still deflation for new vehicles. And then let's see, 2% in roasted coffee. But there also could be some seasonality adjustments, so we have to also understand that. Carbonated drinks down 2%, 2.7% decline in frozen non-carbonated juices. Scroll down a little bit, 2% decline in olives, 2.9% declines in other condiments. Then we got 0.7% decline in motor fuel, and big 4.1% decline in major appliances, 2.9% in appliances in general. And we got 1.4% decline in dishes and flatware. Some men's footwear also declining quite heavily here. 2% month over month prices coming down. Let's see, 3% decline in telephone hardware, calculators, other consumer information items. Geez, the amount of things that they calculate, the track is just incredible. But anyway, so we are seeing a nice little pop. QQQs are up 1.7% right now, almost 2% green. So far right now, we got the S&P 500 up 1.4, and we got Nvidia popping up to 134. We've got Tesla up over 3.8%, back up to $411. However, we have to really be very, very careful here because a gap up of 1.7 is gonna put us right around here. It might still be 19,300 for the Nasdaq, and then S&P 500 with a 1.5% increase is gonna put us somewhere with an open of 5,900, just a little bit shy of 6,000 again for S&P 500. So, we're going to go ahead and turn this level into a support now for SPX because we're most likely going to be gapping up here on the day. But then what happens intraday is the real question. Are we going to see some selling pressure? Because usually when these gaps happen, gaps in most circumstances get filled very quickly. So gap down, buyers step in to fill the gap to the upside, and gapping up, sellers step in to fill the gap to the downside. So we'll see if there's any sellers stepping in to fill the gap on the downside here with the support now sitting at 5,850 to 5,900 on the S&P. Crude oil, $78, but then also remember that the month of January so far, it's up over 8%, almost 9% in fact, 8.8% is where we are. So that is something that's going to come into the picture for the next month's report. That's going to be reporting for January. Okay. Let me just answer some questions here. Dario says, yes, but 9:30 a.m. around everything goes down. Iceman is asking, bull trap by Friday. Well, we're still in the context of a downtrend, so I think it's very important for us to be patient. We are seeing a nice technical rebound on this inflation print. I think the bigger catalyst is the core CPI coming in better than what the expectations were. 0.2 versus 0.3 month over month. Headline coming in at 3.2 versus 3.3. But I think the market really is not looking at the headline, which is increasing. So that I think is still going to be a pretty big concern for the Fed. Of course, they look at core because that's the Fed's preferred measure of inflation. But at the same time, headline is also very, very important. So these probabilities will change eventually. We'll come back to it. We'll see what the markets are now pricing in terms of rate cuts. And I think it's already getting moved out from June to July. You can see there's a very minor change, 42.3 and 42.5. So there's a 0.2% gap between a rate cut in June versus a pause. And so that's been fluctuating a little bit, right? Over the last couple of weeks, back and forth, whether we're going to get a rate cut in June or not. And so there's a 0.2% gap there. And July right now, it's a clear winner, 42.4%, that we're going to see a rate cut according to the market. So that's where we are. Bitcoin back up to over 98,500. I've been trading BITX. I'll be buying a little bit more, 4.7% higher. And again, this is a super leveraged play, so just be very careful. In other words, it's I think two times more levered against the volatility on Bitcoin. IBIT is the second ETF, which is non-leveraged, the regular Bitcoin Trust ETF, up 2.2%. Pre-market. And then if you also take a look at the market breadth, which we discussed in our yesterday's market update, obviously very oversold for a lot of individual stocks. Take a look at percentage of stocks trading above their 20-day moving average. This number came down to like mid single digits to like low singles, 7.7, close to 5.5%. And now we're starting to see this really nice technical rebound on a short-term basis. However, some of the more longer-term moving averages are still at pretty attractive levels. So the risk reward is still pretty good for these. So yes, olives are down. So 892, almost like he's sad the numbers were positive. I mean, I was looking for more buying opportunities, man. I was looking for, well, the number is not positive. The market's reaction is positive, I feel. But yes, I was looking forward to like more buying opportunities. If you haven't noticed, like on the channel, I get more excited when there's red. Just because I want to buy. I just want to deploy capital, and I want to be an aggressive buyer when markets are selling off. When they're green, I'm kind of like indifferent. I'm like, okay, it's fine, whatever. Options portfolio is already going to be higher today because Nvidia, Tesla are the main positions. And then my SOXL puts, which are cash secured puts, they obviously benefit when the price goes up. And right now they're probably ripping right now. SOXL is up over 6% right now. So that's good. But like I said, I was looking for better opportunities, more buying opportunities. So it is what it is. So we saw the report. Do you think the market reaction is justified? Well, I think there's a couple different ways that we can look at it. Number one, the markets are very optimistic that core inflation is coming down and headline is moving up. And that, potentially leads to maybe more rate cut expectations from the Fed. But the bigger question then becomes if we are going into that doesn't increase rate cut expectations at all because the inflation numbers are moving up, right? So that's the last thing you really want to see is inflation moving up. And if headline is moving up, then that only diminishes the probability for more rate cuts. And so on a net basis, if you consider where the economy is, you've got a very strong labor market. So there's no need for rate cuts to try to help stimulate the economy because the labor market's already very tight. You've got job openings to unemployed persons sitting at almost 1.2. And then you've got the economic growth, the GDP growing at well over 2 to 3%. And then, of course, on top of that, when you plug in a 3.2, 3.3% core inflation, headline now approaching 3% again as it accelerated back up for the last 4 months, then that obviously creates a stagflation type scenario or potentially the environment for one. So markets pushing up on the basis of this optimism on core is fine. But again, like I said, we're still in the context of a downtrend of lower highs and lower lows. Damon says number is positive means there's more likely to be cuts. But like how? How would there be more rate cuts if inflation is still elevated at 2.9? I mean, if headline's moving up to 2.9, closer to 3%, that is moving away from the Fed's target. Rate cuts are done when we're already in a very, very 2% or sub 2% inflationary environment. And rate cuts only happen when there is a probability of, let's say, a recession or the economy tipping over into a recession. If inflation is moving in the wrong direction, if it's accelerating back up, that's the last thing the Federal Reserve is going to do is cut rates. So, but the market seeing it as a positive, hey, like I said, market can do very weird things a lot of times. So it's fine. That's why we like to be net neutral for the most part. If it goes up, great. If it goes down, fantastic, even better. All in all, Tesla's back up to 411, so that's good. Nvidia back up to 134. But like I said, I was really hoping for more opportunities. Yeah, that sounded sad. Yeah, I mean, usually when markets go up, I'm not very happy. I just want the markets to give us more opportunities, because the more we buy, the more you can actually get a lot of aggressive discounted deals now, the bigger those gains are eventually going to be. If we keep going up every single day or every single month, the fewer buying opportunities there are, and then that's it. I mean, so its headlines like core inflation rate slows to 3.2% in December, less than expected. Underlying data shows there's more of inflation speeding up. So Mega Left, yeah, I was just cash ready now, and I'll just sit on my hands looking at green candles. Well, we're still in the context of a downtrend, like I said, lower highs and lower lows, and not to mention that depends on what your percentage of cash allocation is. If it's like 90%, then yes, you are completely sitting out the entire market. But if it's closer to 10 or 12 or 15%, then that's still fairly okay, right? Refer to the liquidity framework, because that's really what's going to be guiding you with your risk reward profile and understanding of cash exposures and what makes you comfortable, because everyone's going to be operating at a different cash level. Depending on, where they see themselves in terms of their time horizon, financial objectives, risk reward profile, the market analysis, so on and so forth. So we deployed a little bit on Friday, of course, or whenever I bought SoFi earlier this week, SoFi, View, GSMH. So we'll be buying a little bit more if the market presents those opportunities. Wami, but still waiting for red days only to buy is silly. I've been waiting since August, and let me tell you, I missed out on a lot. If the green days are starting now, you are still early. Well, that's the thing. I mean, it's still within the context, like I said, of a downtrend. And there's nothing wrong in buying on green days when it's a very clear uptrend of higher highs and higher lows. But this is a very strong momentum, right? 1.8, 1.92%. We're probably going to see a lot of buying activity today, but at the same time, I think it's really important, don't get sucked into it, because markets can dump just as fast as they are going up. And that's one of the lessons we have learned very, very hard ways over the years. In 2022, as I mentioned, if you come back to what 2022 was like, we can make the same case for every single time we see the market rally over here. You can see the market rallying over here, right? And everybody even can come out and be like, oh yeah, the market's going back up to all-time highs. There's no way we're coming back down. And this is it. I mean, the markets have shifted the trend. And then now we're seeing a 17% drop right there. This right here is the same thing, right? Down a little bit over 20%, 19, 20%. David, quit being such a bear caddy. All right, fine. We're going to the moon. We're going to the moon. That's it. Let's go all in. We're going to the moon. Screw it. Bought a ton of SoFi at 640 and then 1390, Ken says. That's great. That's incredible. To the moon. Yes, off to the moon we go. Absolutely crazy momentum coming in here. Miscalf says, Caddy's always bearish. Stocks are never cheap enough for him. Everything is overpriced and he just wants red all the time. I mean, there's nothing wrong with wanting discounts. I know I'm cheap. I know I'm cheap. I want discounts. I want good deals. And to be honest, I feel like when markets become very greedy and the risk reward is not that favorable, it becomes a little bit of a challenge. And then, yeah, of course, I like to dollar cost average for the most part. But I do love my coupons. He wants a bloodbath. I mean, that's when you have deals in front of you, when you have like stocks trading at such cheap valuations, doesn't that make you excited, or is it just me? It can't be just me. When it's like walking into one of your favorite clothing brand stores and then watching everything 90% down, 90% off, or 80% off, or 50% off. You walk into the Apple store and everything's like 70% off. Wouldn't you be like excited? You're like, I want to pick up the iPad. I want to pick up the AirPods. I want to pick up the phone. I want to pick up the watch. Everything. Like you want to buy the whole store, right? I mean, that's exciting. That's you're getting good deals. you're getting very, very good discounts and coupons. And so that's, I don't know, maybe it's part of me that's kind of wired this way to be more excited when there's red. And green, I'm like a little bit more indifferent. I do get excited sometimes, but mostly indifferent. So we'll take a look at SOXL puts and NVIDIA puts. Those will most likely be up 70-80% by the time the market opens, and I will be closing those out. I'm actually planning on SoFi calls as well today. So SOXL puts are up 62%. And then the NVIDIA puts right now, they're showing 27%, but then as soon as the market's open, I'm sure they're going to be up more than that. And then I'm sure, of course, a lot of these leveraged plays, NVDL, TSLL, are going to be up more than that. Kevin says, I'm the same, caddy. Green days aren't exciting to me. Yes. There we go. Finally, someone who has the same coupon mentality as me. Do you think Tesla goes up and then sink like yesterday? So let's just come over to some individual stocks. Let me just break some down for you. So what's really important to remember is where the resistance levels are for these companies, right? Where the technical resistance is for Tesla. It's at 420 to 430. Anything inside this red rectangle is the area of resistance. So pre-market, we're up 3.4%. We're up to $410. But again, this is the resistance. That's where we got rejected yesterday. That's what I'm watching very carefully. Palantir, not a lot of mention of Palantir, up over 4.7%. $69 is where it's trading. However, this right here is the resistance area to watch for Palantir as well. Very, very important level of resistance at $70. If it breaks above this level, then the next target is going to be all the way up to $74, $75. So that right there is going to be that lower high or that resistance to watch for Palantir. So again, downtrending channel, lower highs and lower lows. Resistance right now sitting at $70. SoFi, coming up to SoFi, we're already breaking out of this level. Next target is going to be at 1550. So on the day today, I'm going to be watching 1550 to see whether we break out above 1550 or not, or whether we get a little bit of a rejection there, coming back down to retest and gap fill down to $14.87 or $15 per share. Again, I picked it up at $13.75. I'm planning on picking up more in and around low 13s. Low 13s is actually a good buying opportunity, in my opinion, for SoFi. And then finally, we come over to NVIDIA. Anything in the low 100s is actually going to be a better opportunity. I'm selling puts on this in the 120s, 124, 122. Right now up 1.6%, but still this is going to be an area of resistance to watch for NVIDIA as well. That's going to be sitting roughly in the 130s, 133, 134. Previous resistance, we've gotten rejected at 136 for NVIDIA. Coming over to Robinhood. So Hood here is pushing higher up over 5.3%. Looks like it's starting to break out. However, I would still point to this resistance right here, sitting exactly where the price is, just under $44. And then a little bit of consolidation right about here as a support at $36, $37. Kevin, there's a lot of consolidation sideways for Robinhood, and that's what I would be watching. Talking about Advanced Micro Devices, a nice little pop, 1.5%. And it's at support still within the context of this downtrend, as we have discussed. A lot of the stocks are. Support level is going to stay put at 114, 115 for AMD. So TSLL, Mercia, I don't, but we have a lot of members that are selling options on TSLL and then NVDL as well. Just be very careful because it can obviously be very volatile considering that it's leveraged 2 times against Tesla. Same thing with NVDL. So it's up over 7% right now. I don't sell puts or calls on TSLL or NVDL. I mostly trade SOXL, which is a semiconductors leveraged ETF 3 times. But then we do have members, David trades TSLL, NVDL quite a bit on a weekly basis. He's running the whale strategy on that. So we do have a lot of members trading that regularly. TNA up over 8.5%, almost 9%. So small caps also on the move. Let's take a look at IWM. They've got a support sitting right there. That's exactly where it was a couple of days ago. $213. We're seeing a nice little bounce up almost 3% for IWM. But there is also going to be a resistance right about here for IWM. So the real question for today, for the entire day today, is going to be whether this gain actually holds up, or are we going to see any type of selling pressure intraday, because a lot of these are going to be coming up to their resistances. Tesla's going to be coming up to its resistance. NVIDIA is coming up to its resistance. SoFi 1550 is going to be that resistance. Palantir is coming up to its resistance, $70. So is the Nasdaq. So IXIC is coming up to its resistance right about there. S&P 500 is already going to be breaking out above this level again. And then the question is whether that support level is going to get validated or not. NVIDIA, we already talked about, somewhere between 133 and 136. That's where it's gotten rejected in the past. So that is going to be the level to watch. So again, the real question is whether these gains are going to hold up or if there's going to be any kind of selling pressure intraday. If these gains hold up and if you continue to see that momentum upwards, great, fantastic. Just be mindful that we're in the context of a lower high, lower low still. We really need to break out. So I'll tell you which level NASDAQ needs to break out of in order for us to see some kind of shift in the overall direction. So if you were to consider this as a lower high, lower low pattern, right about here, going down, going up, going down, going up, and then this right here would be considered going down, yeah, it would really need to take out 20,000. 20,000 would be the level in order for us to find some momentum. In other words, we're going higher than we did the previous time. And that is a simple trend analysis of understanding the strength behind this momentum. If you aren't able to break out above this previous high, make a lower high or get rejected here, come down even lower, then obviously we're still in the context of this downtrend. All right, everyone. So that's going to be it for today's inflation live stream. Hope you all enjoyed it. Markets are absolutely popping right now. The QQQ's up over 1.7, S&P 500 up 1.4%. And we got Tesla, NVIDIA across the board. Almost all stocks look like it's going to be a very, very strong open in about 30 minutes or so. So I'm going to be placing a lot of trades, trading options for the most part. And then, of course, doing a little bit of buying if possible, if there is any opportunities. Iceman says it's going to be a green bath. Yes, it's not going to be a bloodbath today, unless, of course, things change. But yeah, so far as it stands, it is going to be a very strong open. Do me a favor, subscribe to the channel if you are enjoying the content and the videos. Definitely helps us out. We're very close to 90,000 subscribers, so we really, really appreciate your support. It takes just a second. If you're enjoying the content, definitely hit the subscribe button, and of course, join the Discord if you want to. Definitely come trade with us. As always, be safe out there. Take care of yourself. Happy investing. We'll see you all in the next